It's Accountech Bytes, your pocket-sized peek at the platform-powered progress of accounting tech this week with me, Tom Herbert. Thanks for tuning in, and if you find this useful, please like, subscribe, or follow. Let's get on with the news. Sorry to start off with a PDF, but when you're dealing with serious tax matters, it's PDFs all the way. This one is from the PCRT, so the tax boffins version of Avengers Assemble, bringing together the best tax minds from 7 professional bodies. And earlier this week, they released guidance covering the ethical use of artificial intelligence tools in the tax profession. It's not intended to be a step-by-step guide for how to use the tools. Instead, it's meant to be guidance on the ethical use of AI for tax work. As it says in bold, members are ultimately responsible for any work they produce, regardless of what tools they use in its creation. And if they don't do that, then they're liable to disciplinaries. The guidance sets out a few examples of how AI is currently being used in the tax and accountancy sector. This includes collating large amounts of data and pulling out key information, so things like pension contribution reports and cryptocurrency transactions, pulling together a range of information to compile advice. AI is also used to automate the due diligence process, identify risks and opportunities for mergers and acquisitions. And finally, where I've seen this most and where Accounting Web's own research has flagged a lot of use from accountants and their clients is around technical research. PCRT lays down some fundamental principles, one of which is transparency. The guidance states that you might want to tell clients you're using AI tools, perhaps with a statement in the engagement letter. If a client queries the work, members should be able to explain how the conclusion was arrived at. A lot of these systems can be a bit black box and not provide citations. Members should be mindful of the risks of using AI tools in terms of the reliability of the outputs, or there may be consequences. The guidance also flags privacy issues. So members might record meetings with clients or third parties and then use AI to generate minutes or sluice that information into their systems. You should always let people know you're doing this and what you're doing with the information. While a lot of this stuff is fairly common sense, I think it's really useful to put this stuff out there. There are a lot of tax professionals who are holding back from using these tools because they're worried about them, and there's been a lack of guidance from the professional bodies. So the more of this, the better. Let's stick with AI. And a PwC survey of 4,500 business leaders has found that more than half of them report no revenue growth or cost savings from their use of AI. Just 12% reported both lower costs and higher revenue, while 56% saw neither benefit. Although the report cautions that clearly we're in the early stages of the AI era. HMRC's Director of AI and Innovation, Simon Price, has written about HMRC's preparations for its new Caseworker Assistant, an AI tool embedded in its case management systems. So it's very early days, in tech speak a proof of concept stage, but the tool will focus on summarizing case histories, answering case-specific questions, and monitoring for returned documents. HMRC expects a noticeable reduction in case handling time. I'd be really interested to hear a bit more about the metrics that's going to be used in the testing of this and what a noticeable reduction actually means in real terms. And finally, on the AI beat, I like this from Inflow CEO Mark Edmondson. Now, all of the big four have come out and said they're spending at least $1 billion each on generative AI. It sounds quite a scary number, but Mark here breaks it down. So in PwC's case, this $1 billion is over 3 years. And if you look at PwC's annual fee income, it's around 0.5%. Bearing in mind that research we did on Accounting Web about a year and a half ago found that the average accountancy firm spent between 8 to 10% of its turnover on tech, and that number becomes slightly less scary. Digital bank Monzo has some research for us, and they've revealed that British small businesses invest £4.8 billion every year in tax and accounting software. Let's apply Herbert's law to this research. Who's producing it and what are they selling? And it just so happens that Monzo is launching a free Making Tax Digital tool that business customers can use to make filings under the new tax program. Hopefully, it'll be useful for some of Monzo's business customers with relatively simple tax affairs. Interesting piece here in The Conversation, a new publication to me, but I enjoyed this article. Its research revealed a surprising line of defense against cyber attacks: accountants. So this research suggests a quieter line of defense against attacks is already embedded inside many companies, possibly larger companies, albeit a specialized type of defense that people really think about. That's auditors. So the conversation found that auditors who'd previously worked with a company that suffered a cyber breach became far more vigilant across their other clients. They back it up with some stats here. So of the 2,800 companies they examined over a 16-year period, if an auditor's client had suffered a cyber breach, this impacted on the auditor's work with other clients. Auditors who dealt with a breach client became tougher. So they found that these auditors were 21% more likely to identify serious weaknesses in systems and controls at their other clients. And French accounting giant Penny Lane has announced a €175 million funding round that will enable it to accelerate its AI investments, strengthen its e-invoicing capabilities, and expand across Europe. I got in touch with a Penny Lane executive when I saw this announcement to check if that meant they were coming to the UK. Sadly, they're keeping their powder dry when it comes to crossing the channel. And the Access Group are back on the acquisition train with the purchase of Max Optia. Nope, it's not a brand of contact lens, but it is a cloud-based route optimization and delivery management platform. Let's head over to MTD Corner now, and accountant and bookkeeper Karen Waters is in the 2025-26 testing for Making Tax Digital for income tax, and she flags for those in testing that if you use your Gateway or HMRC app to pay your tax before the 31st of January, the amount it shows to pay is wrong. ATT has a good article on this. They've raised the issue with HMRC, but any solutions will not be possible before the 31st of Jan tax payment deadline. It also recommends to double check any amounts due before arranging payment. This from Sage states that 7 in 10 sole traders unprepared for major tax change as £25,000 prize launched. A lot of passive voice there. Come for the accounting tech, stay for the grammar. Anyway, a survey from Sage and Ipsy of 1,000 UK sole traders found that 70% are not ready for MTD for income tax, and a third are still tracking income and expenses using pen and paper, and 2/3 relying on spreadsheets to complete their self-assessment returns. Sage is running a competition where one lucky sole trader who signs up for the Sage MTD software could win $25,000 to help cover the cost of a tax bill. Last but by no means least, a new dashboard for Dext Solo users shows your clients' quarterly MTD for income tax obligations in one place, so you can quickly see what's overdue, due, and submitted. It's time for the Fab Plug, and the Finance, Accounting and Bookkeeping Show will be live at the NEC in Birmingham, 11th and 12th of March 2026, and it's free for accounting professionals to attend. Here's an example of a session with a very long title that's all about sprucing up your client communications. So this workshop-style session will look at practical ways to make communication with your clients convenient, transparent, and engaging, using technology but without losing the personal touch. And it's presented by 4 practice owners who will be bringing their own client communication experience to the party. Let's smash through some new stuff now, and Xero has announced a fresh new look for its credit notes. So this is bringing credit notes in line with how users already create invoices and quotes. Key changes to be aware of are that paid credit notes will now be protected from changes, and unlike invoicing, credit notes are not automatically saved in the new version. You'll need to manually save your credit note. Here's what I wrote earlier. And last week, Xero launched Xero Analytics, so a new set of embedded analytics building on the features of Sift Analytics, which it acquired back in 2024. This is designed to give small business users and their advisors access to faster, more visual answers to their performance questions without having to export data into spreadsheets or bolt on a separate reporting tool. AI bookkeeping tool Briefcase has issued an update to its WhatsApp integration. So with this latest update, users can switch between up to 20 accounts inside WhatsApp, upload multiple photos or documents in one go, merge images into one PDF for multi-page invoices or receipts, and add a note when uploading a document. This from accounts receivable app Adfin. You can now use statements to nudge customers to settle unpaid invoices. So you can now send customer statements from Adfin to help nudge customers to pay what they owe. A couple of bits of integration news now, and FreeAgent has announced a new integration with reporting, forecasting, and advisory tool Fathom. And mid-market cloud product XLedger has announced an integration with Tessitura. As we all know, Tessitura is a powerful CRM, ticketing, and fundraising management system initially developed by the Metropolitan Opera for its own internal use. Now, what do deepfake purple elephants, Tamagotchis, Alexander the Great, and darts commentator Sid Wardell have in common? Well, they all feature in my latest opinion column, of course, where I look at whether existing accounting software vendors are still solving real problems for their customers, or whether they're actually just sitting on sandcastles waiting for an AI invasion to sweep them away. Deep stuff. And that's your lot for today. Thank you so much for watching. If you find this useful, please remember to like, subscribe, or follow. And if you'd like to keep up to date with the fast-moving world of accounting technology, why not sign up for my weekly email? Visit the link, put your address in the box, hit the yellow button, and it'll be in your inbox every Thursday. I'll be back next week with another video. Bye for now.